Hello, and a very warm welcome. I am Divya Menon, Executive Director, Cash Management Sales at Standard Chartered New York. Welcome to Standard Chartered's webinar today, Leading the Charge, Revolutionizing Cash Management for Insurance Companies in the Asia-Pacific region. It's great to have you with us. Today, we are going to be hearing from our esteemed panelists from the insurance industry and resident experts from Standard Chartered on how changes are impacting insurance companies in the Asia-Pacific region. We have great sessions lined up for you today. Without further ado, I want to introduce you to Douglas Rothman, our Associate Director in Cash Management Sales, New York, to provide the opening remarks.
Thank you again for tuning into today's webinar. I am Douglas Rothman, Associate Director, Cash Sales at Standard Chartered. We designed this webinar to bring together corporate treasury and insurance industry professionals to discuss the latest developments on cash management and liquidity in the Asia-Pacific region. Insurance companies in particular have faced serious operational disruptions and increasing pressures on profits, largely due to depressed interest rates as a result of the COVID-19 pandemic. Despite these challenges, the pandemic presents an occasion for insurance carriers to think hard about fostering and accelerating innovation, delivering improved customer experiences, fundamentally changing their cost structure, and upskilling and reskilling employees for the future. The most successful insurance companies will be those that can localize experiences by efficiently and effectively serving customers in some of the fastest growing markets in the world, notably the Asia-Pacific region, where consumer preferences for interactions and relationships with insurance companies skews largely towards digital. We have some exciting sessions that touch upon these themes today, including insurance industry trends across the Asia-Pacific region, perspectives from a global treasurer, the challenges insurance companies have faced over the last 18 months and what opportunities lay ahead, how insurance ecosystems are driving change, payment trends impacting the insurance industry, what makes China and Hong Kong one of the most attractive markets for international insurance. Before we conclude, we'll open the floor to a Q&A session. We are excited to be hosting this webinar and look forward to your active participation. Thank you for joining us.
Thank you, Doug. We are going to hear now from Peter Wong, Standard Chartered's Executive Director looking after structured solutions development for Greater China and the region. He will discuss insurance industry trends across the Asia-Pacific region. Welcome, Peter.
The outbreak of COVID-19 and the transformation we see happening in the insurance industry and a contrast.
Maybe we can move on and come back to Peter when he has sorted out the technical issues at his end. Maybe I can turn it back to Douglas Rothman as he speaks to Ferdinand Jahnel, Vice President and Global Treasurer at Marsh McLennan and Company, about Ferdinand's perspective as a Global Treasurer.
Ferdinand, thank you for joining our webinar. Marsh McLennan has nearly 80,000 employees across 130 countries. As Global Treasurer, I'm particularly interested in getting your perspective on how Marsh has navigated the events of the last 18 months, which have changed the world in innumerable ways. So my first question for you is, can you first talk about how Marsh McLennan initially responded to the initial shock of the COVID-19 pandemic, and how do you see the role of the Treasurer evolving as a result?
Yes, Douglas, thank you for that question, and hello and good morning to everybody on this webinar from New York. When we went into the global lockdown, which most of you will remember dates back to March of last year, our primary concern was not so much that our revenues would be dramatically impacted by that. That doesn't happen in our business, where we rely on basically the vast majority of existing clients that need our support in helping them renew their annual insurance programs, or on the consulting side, having long-term contracts in place to manage pension plans or health plans and so forth. What we were more concerned about is that those clients of ours that were on the forefront of the impact of that crisis. You think about the airline industry, you think about hospitality, retail, and so forth. We were concerned that those companies would have difficulties in paying us on time. That was our primary concern, and that could potentially have a material liquidity impact on the way we basically manage our cash flows. Therefore, our first response was, and we had to act pretty quickly at that time, aside from a 5-year committed bank revolver that we have had in place already, establish an additional credit line that will give us just that liquidity cushion that we felt is necessary in order to steer through this crisis unharmed. And we were able to put that in place within, I want to say, 3 to 4 weeks. Very quickly, that additional credit line was in place at the beginning of April last year, and it really served us well. We ultimately didn't have to tap into it, because what we also did at the same time is that we started a cash initiative throughout the entire organization around the world, making basically all finance people critically aware how important it is to manage cash locally in terms of getting billings out on time, following up with clients to make sure that they pay us on time, and then ultimately move those funds up to our global cash pool that is then ultimately in the control of my Treasury team in New York and in London. And in fact, this cash initiative led to very strong cash flows through the remainder of 2020 into this new year to date. So we are still benefiting from that in terms of having better processes, having more automation in place than we had prior to the crisis. So this is really a lesson learned in the context of never waste a crisis in terms of improving your own processes. And that really has helped us to basically get through this crisis unharmed and being a better and stronger company than we've ever been before.
Great. Thank you, Ferdinand. You briefly alluded to it, but my next question is directly related to cash management. So can you just briefly talk about what cash management looks like at Marsh? What are some of the things you've done in the last 18 months to eliminate part or all of the slack in Marsh's cash's operations?
Yeah. So I mentioned we have our 2 main Treasury hubs in New York at our corporate headquarters and in London. And that's how we have traditionally split up the world and basically covering all the 24 time zones. We operate a global cash pool that allows us to concentrate funds in multiple currencies very efficiently. What we also decided to do about 1.5 years ago is establishing a new Asia Pacific hub in the region, actually. Given that our business has pretty significantly increased in the Asia Pac region due to an acquisition that we did 2 years ago. If you remember, we acquired JLT, which at the time was, I think, the 6th or 7th largest broker in the world. And they came to us with a very significant footprint in the region, and that made us ultimately decide we need to have a presence locally in order to manage not only the banking relationships that we have had for a long, long time, including Standard Chartered, but also to optimize cash management on the ground in the time zones. It's just hard to do that from London, or even harder to do that from New York City. We are also currently looking into foreign exchange and other activities that we can localize there to be just faster in the region, respond quicker to the needs of our businesses, and support their growth ultimately. In terms of, you asked the question, what we actually did in terms of automation. So we are constantly involved in the working relationship with our businesses up to Marsh McLennan's Treasury organization to further automate basically the bank transactions that happen country by country together with our banking partners. And that is an ongoing process where I always say to my team, there's always a better solution out there. What we have today is great, but there's something better out there, and we have to get on that bandwagon to make sure that we harvest the benefits from that. Maybe I'll leave it at that for now.
Great. Thank you, Ferdinand. We always enjoy speaking with you. Given that we have a lot of topics today, I'm going to pass it over to Divya.
Thank you, Ferdinand and Doug. Ferdinand, it was really great to hear from you on how Marsh McLennan responded to the initial and the subsequent impact of the pandemic, which still which still is there with us. So, shifting gears slightly, I would like to turn over things to my colleague Darren Knoxall, who is the Executive Director in Cash Management Sales at Standard Chartered Europe, as he sits virtually down with Jitesh Malik, Director of Digital Payments and Loyalty Programs at Prudential PLC, to talk about how the rise of insurance ecosystems is driving change.
Thank you, Divya. Jitesh, welcome to the webinar. Thanks again for joining us. So look, Prudential's been in Asia for almost 100 years now, so very aware of the challenges of making healthcare accessible in the region. Within the next decade, Asia is set to account for 2/3 of the global middle-class population, and this rising affluence and longer life expectancy is driving an unprecedented demand for healthcare goods and services. So against that backdrop and the basis that Pulse was launched initially in Malaysia in 2019 with the aim of revolutionizing the future of healthcare, could you tell us a little bit about the strategy behind Pulse and how the platform has developed over the past couple of years?
Good morning, everybody, and thanks a lot for having me in this great session. So let me start by giving some context on what is Pulse, right? So Pulse is Prudential ecosystem for health and wealth products and services across all of our markets in Asia and Africa. Now, Pulse's main objective is how do we make our customers healthier and wealthier? And yes, we started our journey with Malaysia, but we are very, very happy to announce today that we have more than 30 million downloads across our markets in Asia and Africa. So you could clearly see how the whole Pulse digital ecosystem has grown in last sort of 24 to 30 months now. So basically, when we think of Pulse, it's more about health and wealth ecosystem. So when it comes to health, it provides services such as health assessment, AI doctor, or AI-based symptom checker, teleconsultation, telemedicine, fitness, nutrition, mental wellness, and is basically designed to help protect, prevent, and postpone onset of negative health conditions or diseases. What we are also launching is more of wealth services also. So basically, what do we mean by wealth services is providing digital wealth assistant tools to educate users on financial planning, offer attractive and accessible financial products to meet their goals. So basically, we can say, how do we help our customers to protect, prevent, postpone the negative onset of health issues, as well as make them prosperous. So that's where we are with our Pulse journey.
Thanks, Jitesh. So bearing in mind the success of that rollout, how does Pulse improve the customer experience in terms of the movement of cash for premium collections and claims, and how does it benefit Pru from being part of that wider digital ecosystem?
Yes, thanks. So basically, there are two parts of this question, and I'll focus more from a payments perspective. So how does our customer benefit? So first of all, the Pulse, our main focus or the top priority is to support frictionless 24/7 digital payments of our customer choice. And we continue to add more features and functions in Pulse, including a wallet function that will further enhance our customers' experience to engage and access content and services that will make them healthier and wealthier. Now, second part is very important, access to the wider digital ecosystem. So as you know, Prudential, we operate in multiple markets across Asia and Africa. And this is where we get the best help from being part of the wider ecosystem, because no two market is same. And we have to always balance between the three things. How do we provide digital payments which are 24/7 of our customer choice? And no country is same. You know, some countries are more QR code, some countries might be more. Cards, some countries might be more. Real-time payments. Second thing is, how do we also support all the regulatory, legal, data privacy, business continuity, management across all the markets, right? And the third thing is, how do we strike a balance where we provide best of class user experience, plus on the same time provide cost effective payment processing for our business, and also help our business to increase the straight through processing and higher operational efficiency. And that's where our payment partners such as Standard Chartered Bank really help us to have those three things: best in class user experience, capability to support multiple payment methods, regulatory legal compliance, and then 24/7 higher STP and higher operational efficiency.
Great. So you mentioned a few things in sort of development. So what does that roadmap look like for Pulse, say, the next 12, 18 months in terms of geography and maybe what else can be added to the ecosystem?
So as of now, we are three things I'll focus on. First thing is, how can we work to launch more health and wealth product and services across all the markets? So that's the first thing, how we can make our content, our product, our services better and roll out new functionalities. The second aspect is, and this is mainly for the payment aspect, how can we deliver payment as an infrastructure? So what do I mean by that is, for every single product we provide on Pulse, there are different payment methods or payment patterns. One-off payment, recurring, with tokenization, without tokenization, support for QR code-based payment. So I want to design the payment solution that is more futuristic. So which means payment is not the limiting factor to deliver any product and service on the Pulse. So that's the second very, very important part. And the third part is also, how do we provide more direct to customer products, and also how do we generate more customer engagement, which leads us to more online to offline sales. So the third thing is also very important, more direct to customer products, as well as higher customer engagement and more online to offline lead conversion.
Thank you very much, Jitesh, for that. I'll hand back to Divya.
Thank you, Darren. Thank you, Jitesh. I have to say, Jitesh, it is very, very interesting to hear about the evolution of Pulse as an insurance platform. And I'm sure the audience would love to hear and learn more about it in the coming months. We do have Peter. Seems like he has managed to resolve the technical issues. So we'll go back to him to hear about the insurance industry trends across Asia Pacific region. Over to you, Peter.
The outbreak of COVID-19 and the transformation we see happening in the insurance and healthcare industry represents a contrast which reminds me the famous quote from Charles Dickens: "It was the best of times, it was the worst of times." Global insurance is a $6 billion industry. There are three distinct trends I see going to shape the future of the industry. A lot of that are happening in Asia Pacific. The first is technology as an enabler and a disruptor. COVID-19 has accelerated digital transformation by 3 to 7 years. Over $20 billion has been invested in InsurTech in the past 5 years, allowing insurers to quickly commercialize telemedicine, predictive underwriting, and subscription-based customer acquisition using artificial intelligence and Internet of Things connected to portable devices. Digital platform is shifting the focus from protect to prevent and creating a new ecosystem to customers, especially to the younger segment, improving access and user experience in paying premium and receiving benefits. The second trend is regulatory landscape. IFRS 17 and Solvency II will impact capital and asset liability management. The insurers are playing bigger role in co-insurance as well as plugging in product innovation at a rate never been seen before. Capital needs to be more fungible. Private equity may provide a new source of capital. Alternate investments, which are less interest rate sensitive, may become a new asset class for insurers. Cash forecast and real-time liquidity management will become more important in the new normal. Rating agencies are likely to refresh their rating model to incorporate more dynamic risk scenarios. The third trend is market changes. Asia promises to significantly contribute to the growth of the industry in the next decade. China is already the world's second largest insurance market. 100% foreign ownership is now possible. Controlled deregulation in the Greater Bay Area, or GBA, will allow Hong Kong insurers to tap the $50 billion health protection gap in Guangdong province alone, according to a recent research by Swiss Re. GBA may also foster the use of central bank digital currency, or CBDC, which can be able to solve the insurance use case of eKYC. HKMA already launched a blockchain-based cross-border mBridge pilot, which connects the CBDC infrastructure in Hong Kong with that of China, the ECNY with that of ASEAN, Thailand, and Middle East UAE. 2022 is less than 3 months away. Global insurance demand is expected to pick up from around 3% in 2021 to close to 4% in 2022, a much faster rebound than we see during the global financial crisis. I wish you all enjoy sharing from our distinguished speakers and look forward to expanding our collaboration in the months to come. Thank you.
Thank you so much, Peter. So while we have Peter there with us, he also sat down for an in-person conversation with Selina Lau, the Chief Executive of the Hong Kong Federation of Insurers. Let's see what they discussed.
First of all, congratulate Selina for being appointed as the Chief Executive of the Hong Kong Federation of Insurers since early last year. We'd like to invite you to share with us an introduction of Hong Kong FI.
Okay, thank you, Peter. My pleasure to be here speaking to all the very distinguished audience. The Hong Kong Federation of Insurers represents 139 insurance companies in Hong Kong. As you can tell from the number, we are a very vibrant market. The HKFI represents both general insurers, life insurers, reinsurers, and we also have some captive insurers as our members. Our role is to represent the interests of all our members. We are the party to talk to when the government has any new policies. We're also the party to talk to with the regulator when there are any new regulations regimes to be launched. So when there are any industry issues, people will come to us, including the media, the government, or even the customers. So we are the representative body for this very vibrant market. We underwrite, our gross premium is $78 billion US, and it is close to 4% of our GDP. So I think we are a very important number of the society.
Yes, indeed. COVID-19 has accelerated the digital adoption by many industries, including the insurance industry. Can I invite you to share with us what Hong Kong FI has seen in the market development of this aspect?
Right. As the industry representative body, we do see that it is very important to maintain the sales force, the distribution power of our insurance companies. So that's why when the COVID-19 first outbroke, we talked to our regulator, the insurance authority, to find a way for the intermediaries to continue serving their clients without any face-to-face interaction. And it is also very important for them to continue distributing products to ensure that our communities is properly protected. So that's why we launched the virtual onboarding platform. It is a very simple platform. It is a video conferencing tool so that the insurance agents can discuss or liaise with their clients on a policy. What the HKFI does is that we clear all the regulatory hurdles with the insurance authority. We source the correct vendor, a suitable vendor with a more preferential price for industry, so that the regulators does not have to deal with 48 insurance companies individually, and we can also create a scale of economy so that we can negotiate for a better price with the solution vendor. It is a win-win situation for both all parties concerned, and of course, our clients will be able to get the protection they need through this video conferencing tool.
Thank you, Selina. The Greater Bay Area will provide a lot of opportunities for insurers. Can Hong Kong FI share with us what has been involved so far on this new initiative?
Of course. We are all very excited about the GBA development. After all, it has the 77 million of population. Comparing to Hong Kong, we only have 7 million people. So the market is much bigger. But for the time being, we are more focusing on the customer service at the back end, so that when clients have initiated a policy in Hong Kong, and when they move back to China, maybe they are Hong Kong residents living in the GBA area, or they are mainland Chinese people who came to Hong Kong and bought a policy. So these people are now in the GBA. They cannot be served because the border is closed. There is difficulty for them to get the proper service. So that's why we are focusing on establishing this customer service center to ensure that our clients in the mainland are being served. What we do now is that we discuss with our regulator, the insurance authority, as well as the CBIRC. And we also work with our counterpart in Macau, because Macau is also part of the GBA. So we're creating this platform, a physical platform to serve the mainland customers in China. We're also creating an online platform so that customers don't have to physically go to a customer service center, but they can use the online service. This is being done, and hopefully before the end of the year, we will have more announcements to make.
Fantastic. We are very grateful and fortunate to have Selina to share with us all these interesting developments. One of the 6 missions of Hong Kong FI is to promote Hong Kong as the regional insurance hub for Asia Pacific. And at Standard Chartered, we have a strong footprint and market in this region. And we are very committed to partner with Hong Kong FI on this market development initiative. We look forward to have Selina with us again in the future. Thank you.
Thank you, Peter. Thank you.
Thank you for such a great conversation, Selina. Peter, we will hear more from Peter as we go along in the panel and in the session. We do have some questions coming in, so please continue posting those questions. We will take them at the end of our sessions. For now, we will go back to Darren Knoxall to talk about the payment trends impacting the insurance industry. Over to you, Darren.
Thanks again, Divya. So look, as we've already heard, the COVID pandemic accelerated innovation and forced many industries to think differently. The banking and cash management and payments landscape is changing rapidly, and also the insurance industry, was no different. It had little choice really to become more digital, think of new ways to distribute policies, and adapt to Treasury and finance teams working remotely. So from increased online sales and the demand for real-time information, treasurers of the future will need to harness the digital tools available to manage liquidity effectively. And we heard from Ferdinand earlier on that topic. So the shift from batch payments and cut-off times to 24/7 real-time payment infrastructures is already well underway, and will require a fundamental shift in the banking services of most companies to support the business. But when we look at the actual insurance industry, with something like $3 trillion in claims payments per year, the insurance industry still heavily relies on some pretty outdated infrastructure when it comes to bank connectivity. With a tendency to rely on checks, which are slow, they lack transparency, vulnerable to fraud, and more expensive to process than digitized payments, insurers could well be missing out on opportunities to drive operating efficiencies and cost savings. Instant or real-time payments also allow insurers to develop new business models and enhance the customer journey. But by teaming up with insurtech providers or platforms, carriers can achieve a digital inbound and outbound payments and disperse claim payments to customers with faster, near real-time technology. Take the case of how developments in technology and payments infrastructure have helped deliver a seamless experience for Singapore cab riders. As most people know, Singapore has its fair share of rainy days, 167 days on average to be precise, and this drives demand and a price surge for taxi cabs in the city, something that one insurance company wanted to help guard against. But the insurer developed an API connection that initiates an instant payment automatically upon the cab rider submitting a successful claim, which again is a very simple process and as easy as forwarding the journey receipt to the insurer's claims team. But once the insurer has verified that it was raining at the time and location stated on the receipt, claim is authorized and the request is sent to the bank via a payment initiation API. But given the relatively low premiums and payouts, this automated process is cost effective and improves the experience for the cab rider, often seeing up to 60% of their fare reimbursed, within 4 hours of finishing their journey. This also generates real-time status information for the insurer to be able to update their policy administration system. So a win-win all around. So thinking back, it was clear that mobile technology, and in particular mobile money, would have a significant role to play in keeping people connected and delivering financial support and contact-free ways to pay for food and other life essentials. With 5.2 billion mobile users worldwide, the mobile industry has the reach and innovation to extend financial inclusion and build more resilient societies. In 2020, the number of active mobile money accounts in Asia Pacific increased by 20% to 52 million, and the value of transactions increased by 34% to over 110 billion US dollars. The growth of mobile-enabled microinsurance has extended coverage to millions of previously uninsured people. Insurance providers have encouraged this growth by expanding coverage from traditional life insurance and health to general insurance and income protection. Historically, these premiums were collected via the deduction of airtime. However, over the past 3 years, there's been a huge shift towards premium collection via mobile money, with almost 65% of providers now collecting this way versus only 31% in 2017. Digital innovation has also led to parametric or index insurance evolving. One example is where smallholder farmers have found it easier to access these services. Farmers can buy policies based on a rainfall, drought, or crop yield loss index, which automatically pays out when an index triggers a certain threshold. So you can see the use of mobile money can help reduce operating costs, extend the reach of insurance products, and enables providers to digitize and deliver index insurance services where it's needed most. So Divya, back to you.
Thank you, Darren. Clearly lots of innovation going on in the payments space. So we will now move on to another great topic, SC Ventures, Standard Chartered's business unit that provides the platform and catalyst to promote innovation, invest in disruptive financial technology, and explore alternative business models. Joining us today is our SC Ventures North Asia lead, Fei Zhang. He is also the former head of blockchain at Allianz to provide insights into some of these disruptive technologies impacting the insurance industry. Over to you, Fei.
Yeah, thank you, Divya. So yeah, as Divya mentioned, I currently head the North Asia division of SC Ventures. We do three things, three pillars, basically VC investments, venture building, and also doing POCs for the bank BAU business and turning those POCs into real production systems. So previously I was head of blockchain at Allianz in 2019, and also co-founder of the B3I, Blockchain Insurance Industry Initiative, founding the B3I Alliance, and was CEO of the company back in 2018. So I'm supposed to talk about new trends and solutions and what we are doing as SC Ventures in different spaces. I will talk about two things. One thing is the blockchain. I think one keyword that is mentioned a lot is DeFi, distributed finance. So distributed finance, I think there's a lot of buzz around that. And to get you started, I think you could search some keywords like Ethereum, Solana, Polkadot, and all of these are underlying blockchain database layer that can fuel a new world of distributed finance, which potentially could basically disrupt the existing world of finance. I think the key differentiator of distributed finance, it's solving the problem of lack of interoperability, and thereby lack of interoperability leading to operational efficiency issues across organization boundaries. A typical example is the B3I, where reinsurance contracts moves between different organizations. Another example, bank assurance. You need human labor, and another example, like universal life jumbo loan plus wealth management, cutting across different organizations. Another trend that I see, particularly in China, is which is also relevant to life insurance, is this demographic trends driving the technology, economy, and society evolution. So basically, there are two ends: the young end and the old end. I see that lots of people, might be curious about the Chinese government's recent policies regarding the education, regarding medical expenses, regarding real estate. These are all leading to one single objective, which is to create a better environment for the young generation to have better life in terms of medical expenses, in terms of education, reducing the burden, the monetary burden of young families, so that they can spend more and fuel the economy and produce more children as well. Another trend that we are seeing also, China is actually aging very, very rapidly. And we are seeing the market, the retirement service market, growing from 1.1 trillion to a expected 3.4 trillion in the next 10 years. Population of over 60 growing into 362 million, but national pension is only negative 582 billion yuan. There is a big gap, and we're exploring, actually, as Venture, we're exploring a partnership opportunity with leading digital insurance broker in China to address this market, which is at least worth 100 billion US dollar. We as Venture, we do. How do we work with customers in the insurance industry? We co-create solutions together with clients. The digital insurance broker example that I mentioned before, it's a typical example of a co-creation. Another example, we partner with a university hospital to provide a sports community platform for young amateur athletes with the right content on how to properly exercise, how to recuperate, and also recuperation therapists that we train with industry-renowned contents and accreditations. So with that, I pass over to Divya.
Thank you so much, Faye, for the great insights. Again, as a quick reminder, if you have questions during today's event, please feel free to put them in the chat box on the Q&A tab on the right-hand side of your window. For our final session about what makes China one of the most attractive markets for international insurance, we welcome back Ferdinand and Jitesh. Also joining us for this session is management consultant Dick Fong, who has 2 decades of experience covering the insurance sector. Thank you for joining us today. I will hand it over to Peter Wong to lead the conversation.
Thank you for Vivian, and welcome back to the panelists. The first question is about positioning for growth in Asia. Asia region is a close number 3 compared to the American and the Europe, UK markets, and expected to contribute to a significant portion of the growth in the coming decade. Many global insurance clients, companies are building the regional treasury capabilities across hubs in Asia, such as Tokyo, Hong Kong, and Singapore. Ferdinand and Dick, could I invite you to comment on this trend? Maybe Ferdinand, you can start first.
Yes, thank you. So from our perspective, Marsh McLennan, we consider ourselves the global leader in advising our clients in the areas of risk, strategy, and people. And as I mentioned before, we are basically in all countries around the world where our clients are right now, somewhere around 130 with close to 80,000 people worldwide. And for us, the Asia Pacific region clearly is of greatest importance because it has the highest growth potentials for us as an organization compared to our more traditional markets in the Americas or in the European landscape. And therefore, you can expect us to invest in that geography going forward quite significantly. We are the advocates of our clients as they seek advice in terms of managing the risk that they have to manage when they go into those geographies like mainland China, but certainly other Asian countries as well. And we want to make sure that we advise them in the way that they are protected in the best way possible through the products and offerings that are available in the insurance world in mitigating and transferring that risk. So as I said, you expect us to continue to follow our clients and continue to support them as best as we can. And we will certainly seek opportunities to build out our network, our presence in those geographies in the Asia-Pac region going forward as well.
Thank you. Dick, you want to share your experience from a management consulting point of view?
Yeah, absolutely. Thank you, Peter. I mean, this is obviously exciting, right? As per your conversation with Selena, right? GBA alone, we're talking about a geographical region that is, within 2 hours driving, right? With close to 80 million population, but at the same time, it attributes to, more than 20% of the GDP of China, right? And it is relatively, relatively, right, on average, you don't count, take Hong Kong as a smaller part of the GBA into the equation, right? It's relatively undeveloped, I would say, right? If you look at China, which recently, opened up the market to foreign insurers, right? If you look at the product range, and so as, the hunger for new product innovations, connecting the world, right? We see huge opportunities in just the GBA alone. Of course, not to, to discount, the attractiveness of the other East Asia market, right? Like Southeast Asia is pretty amazing, right, as well, where all this region combined, as Jitesh, mentioned earlier, right? They're all different, but at the same time, I feel like, as someone, born and growing here, right? We are part of shaping the new model on insurance, right? Products and offering. And at the same time, right, witnessing the convergence of insurance and so as the other sector, like banking you mentioned earlier, right? In terms of wealth management, in terms of health management, in terms of the technology advancement. So definitely, this is like a exciting part of the world for any insurance companies and financial institutions in general.
Thank you, Dick. Yeah, you touched upon Asia. You touched upon the GBA. I think within Asia, China is a significant market with $660 billion US dollars of market size. And Selena earlier from Hong Kong FI perspective has discussed the opportunities from GBA. From a market perspective, how do you see the GBA deregulations would work out? What do you expect from this development, and why is that exciting? Can I invite Jitesh to comment on this?
Sure. I'll try, right? This is like $1 billion question, right? Nobody has the absolute clear answer to that, right? Regardless of all the excitement that I mentioned earlier, I think the regulations were relatively, uncertain part, in terms of the development, right? But personally, I do believe that the direction of travel is set, right? It's going to grow. It's going to innovate. It's going to be exciting. It's a matter of when, right? But also, because of that, right? I think from all the conversations I'm having with, local and multinational insurers in this part of the world, right? And especially for the MNC insurers, it's about, what should we prepare? Where do we play? How shall we, or when shall we, actually invest into the market? And there are a few critical, I think, decisions, right? On all these, questions. Part of it, especially for the foreign insurers, is that, while the China market is big, right? The product is relatively simple and it's very, very distribution driven, right? And in order to play, right? Shall we play big? Invest and acquire the market share big enough that will, create, value for our shareholders, or shall we play small and niche, right? Leveraging our international, technical excellence, on the underwriting, and ride the wave of the growth of this market, right? That is one. And the second part is that, going back to the GBA, right? I think Wealth Connect, for example, a new policy that's been talking about, among the regulators and so as all of us, for years, right? I personally will believe that, the COVID-19, and so as, the other developments for the past 2 years, right? Has, accelerate some of the agenda, which, just imagine, right? If, there is a way which is coming, right? Through this Insurance Connect, Wealth Connect and all that, right? To release the buying power of this GBA region for, foreign currency nominated products, right? For individual line, and also at the same time, provide an opportunities for our multinational insurers to provide, somewhat like, a commercial line kind of products, to our, SMEs, in the GBA, that itself presents an exciting opportunity to all.
Thank you, Dick. Let me also invite Jitesh to comment on how does the GBA provide opportunities for for your initiatives.
Hey, thanks, Peter. So, Dick has done a great job explaining the importance of GBA, right? Now, when it comes to Insurance Connect, right, it will enhance the connectivity of cross-border insurance services, and it will also provide increased financial integration within GBA, right? Now, as you know, Prudential has presence in Hong Kong and all the 9 domestic cities in GBA. Our purpose is to ensure that our customer purchase solutions that meet their needs and are served by the channel of their choice. Now, with Insurance Connect, we will be leveraging capabilities to create synergies in China and Prudential Hong Kong, right? So basically, if you see the first phase of GBA, when it comes to Insurance Connect, it is mainly enabling insurers to establish service centers in mainland GBA cities for after-sales services. But what is very important is to see how GBA evolves in terms of regulatory, data privacy, legal compliance, and then how we can make this whole Insurance Connect a good thing for our customers in Hong Kong and across all the 9 cities in GBA. So it's very, very interesting for us.
Thank you. This final question is for all members of the panel. It's about the journey of digital adoption. As all the panelists has one way or the other talk about digital adoption. What is your experience about that process within your organization or your clients, and which we see the use of API, instant payment, and digital collection portals. What types of technology will be more relevant to your growth agenda in Asia, and how do you? What's experience you can share on that particular initiative? Maybe Ferdinand, you want to start?
Okay. Yeah, so I would say from our perspective, as we are the intermediary from the perspective of Marsh, broking between clients and insurance markets, I think it's going to be a multi-horse race where different technologies will compete with each other going forward and develop alongside, whether we will ultimately arrive at a solution, one platform solution that serves all the needs of insurance participants. I am doubtful. I think we will go through a long phase of having multiple product solutions out there that will compete with each other and ultimately should serve the main purpose, which is ultimately clients that should have a better experience in the whole claims processing and payment execution process. So that would be my perspective, but I'm curious what the other panelists have to share.
Exciting. Thank you, Ferdinand. How about Dick? You want to share?
Sure. I mean, the digital or insurtech or fintech in general is a topic that is always fascinating, right? And I think, Peter, you mentioned earlier, right? It's the technology disruption, innovation, but also it's the open, banking, open insurance that we are all expecting, in this part of the world, right? Where comparing to, the European, counterpart, right? We already see the changes, that open banking has brought to, the overall, banking and so as fintech industry. And the key to that is, if you apply that to, to this part of the world, although in China, it's relatively advanced when it comes to, API connecting everything and everyone, the openness is actually, in my own opinion, right, it's going to benefit and change the landscape completely. Just imagine, right? For, insurance contract, individual insurance contract is not exactly the simplest contract to understand, among all, right? And, and many of our insurance companies are talking about, how do we optimize, the benefits for our customers. But to understand that requires, insurance companies to open up, right, the in-force policies information so that, the customers and so as all the, insurtech innovator can collaboratively come up with some innovative ideas to help our, our customers to get the best protection. and project that to, to the banking side. I think, that is even more obvious when it comes to wealth management, right? How do we help our customers, to better advise them on investment and managing their health and wealth, right? The connectivity, and so as the open connectivity, among insurance and banking is prominent to that, right? And the second part is that, besides the API and so as technology, I think the other trend that we observe, as a development of the, technology side of the insurance and banking is actually the open data, right? Where, there are numerous, advantages over, sharing information. I think, Pei has mentioned, the numerous use cases in insurance for, reinsurance and so as banker assurance. And just this recent, policies from the HKMA that requires banks to include ESG shock, on their stress testing that already triggered numerous, conversation between banks and insurance there, is there a way for us to exchange data so that we can all manage risk better? So I think, that will be, our futures, right? The more open it is, the more exciting it is going to be.
Thank you, Dick. Jitesh?
Yes, so thanks, Peter. Basically, from a Pulse perspective, as we see, Pulse is a pure digital ecosystem, right? So the use of API, the use of open technology is very, very important to us. However, what I like to do is draw attention to how central banks are also making it more innovative. So take a very clear example, Singapore MAS, right? SG Findex, right? It is allowing banks, insurance companies, and even security providers to come together and provide a single view of customer data, right? So with SG Findex today, you can see what balances you have across the banks. In future, you would be able to see what policies you hold across various providers and what type of investment portfolios you have, which is great, right? So what really I wanted to add was, it's not just the fintech, it's also how central banks are also sort of accelerating the innovation, and that's very, very important.
Fantastic, Jitesh. I think this is a good example of private-public partnership. With that, I would pass this to Vivian.
Thank you so much. No, these were great insights. We do have a few very interesting and topical questions coming through from the audience. And since Jitesh, we had you speaking last, can I ask you this particular question? I mean, you did talk about APIs and open banking, how being technically advanced and providing sort of these new age solutions to your consumers is that much more important. Can you talk a little bit about whether you see this shift to digital payments being a permanent or a temporary phenomena? And how fast do you think digital payments is likely to be adopted and become the most prevalent mechanism or method of transacting?
Yeah, thanks. So basically, I'm a very, very optimistic person. So I like to say that the shift is permanent, right? I don't think the users and the customers who have experienced such a great connectivity and experience of digital payments will go back to the usage of cash, right? And from my point of view, what is very important is that COVID has accelerated this significant digitization, right? And now digitization, if I can say, plays very important role in our financial lives, no matter in which country you are. So I think this shift will be permanent or should be permanent, right? Now, what we also see that, again, coming back to innovations from central banks, this whole adoptions of real-time payments, whether it is FPS in Hong Kong or Fast in Singapore or PromptPay in Thailand, is really delivering a great customer experience, right? It's just single-click payment journeys. In addition, the two very important aspects is the maturity of overlay services. Like you can pay to somebody using a virtual address, whether it's mobile number, passport number, IC number, or a company unique identity number, and sort of having this standardized national QR codes, right? Like SGQR in Singapore. And the third thing, which is very, very, very interesting, is how central banks are coming together to integrate their real-time rails. So you could see somebody in Singapore can pay someone in Thailand just by using their mobile number, because prompt pay in Thailand is now integrated with Pay Now in Singapore. So similar to this, Pay Now integration with UPI in India has been announced. Pay Now integration with Do It Now in Malaysia has been announced, and now non-bank financial information companies such as wallet providers also has access to real-time rails. So I think all of these things will only continue further innovation in digital payments, and this shift will remain. It's a permanent shift. That's my opinion.
Thank you so much, Jitesh. And I know we're at the top of the hour, but one very interesting question that I wanted to pose to Ferdinand, which came through. You know, we are talking about real-time treasury, instant payments, evolution, as we spoke for the last 1 hour. As a global treasurer, can you talk very, very briefly about some of the benefits and challenges that real-time treasury brings?
Yes, thank you, Divya. So real-time treasury, that is certainly for us somewhat of a vision still that we are focusing on, but that we are not there yet. But what it ultimately allows us to do, if we get to that, is basically maximizing the amount of liquidity that we run through our infrastructure, and deploying it ultimately for business purposes that are important to the company as a whole when you look at it from a capital structure, capital management perspective. We are a company, obviously, that is publicly listed, so we have shareholders that we have to take care of. We pay dividends, we buy back our stock, but at the same time, we are also investing on our business through capital expenditures and through M&A activities. And the better we manage cash and liquidity within our infrastructure on a real-time basis, the quicker we can ultimately also deploy that cash, either for the benefit of our shareholders or for the investment in our business, and ultimately provide an opportunity for the company to grow faster. So that has all these macro consequences for companies like ours, but we are certainly just an example for basically all other companies that could benefit in the same way from faster cash deployment. So I guess I'll leave it at that, but that's a topic you can talk about for a long time.
Thank you, Ferdinand. With this, I'll pass it on to Doug to provide his closing remarks.
Thanks, Divya. We strongly believe that the Asia-Pacific region will be the biggest engine of growth for our insurance clients for the years to come. As a bank, we remain committed to serving our insurance clients in Asia from a cash management perspective. We have and continue to work hard at developing and co-creating solutions with our insurance clients to ensure that we are addressing the challenges that matter most to them. Thank you very much for joining today. We hope that you found this session to be engaging and insightful. Following today's event, you will receive a feedback survey by email. We hope you will provide us with your valuable feedback. We'd love to hear what you thought about today's event. We rely on your feedback to make sure that we are providing you with the most up-to-date, relevant content, so we appreciate any thoughts you provide to us. Thank you.